Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, where we break down the latest ASX announcements from public companies that are doing interesting things. Today's Bulls and Bears report is brought to you by Base Resources, ASX code BSE. I'm Matt Birney and I'm joined now on 6PR by the Managing Director of Base Resources, Tim Carstens. Hi, Tim.
Hi, Matt.
Base Resources operates the Kwale mineral sands mine in Kenya that it started back in 2013. Kwale is rapidly proving itself to be something of a cash cow after Base recently announced its second consecutive dividend following a solid set of half-yearly numbers from the mine. The company is also looking to get into production at its Toliara mineral sands project in Madagascar that shows some off-the-scale financial modelling if it can be jolted into production. Tim, you paid out about $30 million US to your shareholders last October, maiden dividend, or 3.5 cents a share. What's your latest dividend worth and how does it stack up against your share price?
Yeah, well, the total cash for the second dividend will be $27.5 million US, which is 3 cents per share Australian, which is about a 10% yield on the 30-cent share price as it stood on the day we announced the dividend.
What are the major mineral sands that you mine at Kwale and what are they used for?
We produce ilmenite and rutile, which are two different forms of titanium dioxide, the majority of which goes into the production of pigment. So everything you see in the world with a colour has a titanium dioxide pigment in it. We also produce zircon, which is used as an opacifier in the ceramics industry. So consumption of our products is very much tied to urbanisation and wealth and global GDP.
It looks to have been a pretty good half year for you. Just how much money did the company make for the December 20 half? Let's go with EBITDA.
Just short of 34 million EBITDA.
Okay, and what are the margins like at Kwale? How much room for error have you got, so to speak? How does that EBITDA of 34 stack up against your revenue for the period?
Yeah, it's one of the great features of Kwale is that, revenue of 73 million for an EBITDA of 34 million. The revenue to cash cost ratio is around 2 to 1.
What about debt? How much debt are you carrying now? And what was your last reported cash at bank figure?
Yeah, at the end of December, we had 35 million US in net cash. On top of that, we had 25 million drawn on our debt facility, which we had just as, a precautionary measure. We'll be repaying all of that at the end of March. So, yeah, we're sitting with 75 million pre-dividend. And
you're looking at being debt-free at the end of March, is that right?
That's correct.
Okay. How much longer can Kwale continue to churn out big numbers like that? What's the modelled mine life there, and are there any opportunities to extend that mine life?
On the basis of the current mining lease, we've got through until the end of 2023. We will be releasing a pre-feasibility study on the North Dune in April. That's sort of the next opportunity we may find for some mine life extension. And then we've got some drilling taking place at the moment in a couple of areas adjacent to the operations. And we've also got some areas further afield in Kenya that we're looking to unwrap over the next couple of years that we think might have the potential to extend our stay in the country.
Tim Carstens from Base Resources. Thanks very much for joining me on 6PR today. And remember, Bulls and Bears is only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney. Thanks for listening to Bulls and Bears.
For more public company CEO interviews, go to the Money page at 6pr.com.au and click the Public Companies tab.